Before we get on with today's podcast, here's a special announcement for our podcast listeners. From time to time, you hear Steve Peasley talking about portfolio checkups in locations in the San Francisco Bay Area, Los Angeles, and Orange County, and that kind of leaves you out if you live in Orange County, Florida. Well, don't feel left out. If you would like to take Steve up on his offer to look over your portfolio and give you a health scan, it can be done on the phone. You can send copies of your documents by fax, email, or regular mail and join Steve for a one-on-one conference call. If you're interested, just go to investtalk.com or call our 24-hour InvestTalk answer line at 888-99-CHART. That's 888-992-4278. And thanks for listening to InvestTalk. Welcome to our one-hour meeting of the minds about money, your money. This is Invest Talk, made possible today and every day by KPP Financial. It's about managing risk while looking for profits, putting the money you worked for to work for you. And now, here's registered investment advisor Steve Peasley.
Good afternoon, everybody. Welcome to Invest Talk on this Friday afternoon. It is November 14th. I can't believe we're already halfway through the month. So welcome to the program, and of course, welcome to the podcast listeners. We appreciate that. And today I have, as you know, I'm Steve Peasley, and I have with me today Helen Crawford, one of our registered investment advisors in the office. Thanks for coming, Helen.
Hi, Steve. It's good to be here.
So she is going to help me out with the charts and the information and all this stuff. Just so you guys get an idea, Helen, I have to sit in front of a number of computer screens, and I have two keyboards that has to be operated at the same time. So when someone comes in to help, it makes my job much easier. And it's always nice to have someone sitting next to me that I can bounce things off of when we have an issue that we want to discuss. So remember, this is the 1 hour of set aside every day to talk about your retirement, your funds, how to make it grow. And believe me, I know how difficult it is right now. We have felt the pain with everybody in this market. Don't ever think money managers are always right. They're not. Matter of fact, I was reading today 100 of the largest stock mutual funds out of 100, 71 of them are underperforming the market.
That's a huge number.
That's large. Wow. Mm-hmm. Underperforming, not performing with the market, underperforming the market. That means they're much worse off than the market. Now, knock on wood, KPP Financial, all our accounts are not as bad as the market. So it's very cold comfort, everybody, to know that you're beating the market, you're beating your index. It's very cold comfort when you're still down. Mm-hmm. It's not like you're happy.
Makes it no easier.
No, because everybody wants to make money. So I like to be very honest with my audience, with our clients. That's kind of our hallmark. We try to tell it like it is. We are not up this year. Hardly anybody is. Even when you try to hide and go to places you thought were defensive, they weren't. The normal places this year, there was no place to go. Let's say you bought bonds. Bonds fell sharply too. You could go anywhere. We went to defensive type stocks like Procter & Gamble, like Johnson & Johnson. They fell too, just not as far, but they all fell.
That's right. And looking at it too, Steve, have you noticed that it's very easy to look from the outside in and, should have, would have, could have, and there's a lot of people out there, we make mistakes too.
Yeah, professionals make mistakes, people. Our job is to make less mistakes, okay, than everybody else. And I think we've done that. I just wish we would have done better. That's what I wish. Because our money is online. I mean, my money is right along with all our clients. I mean, I buy the same things in the same accounts, sell the same things.
Feeling the same hurt.
I have the same pain. My pain's even bigger because not only my own personal money, but my clients' money. Mm-hmm. So, anyways, I just want to I try to be positive, try to keep a good attitude, but I don't want you to think that we are just making all kinds of money. Not this year. Now, I'd be happy to put up my performance against anybody. This year, since 2000 even, since the market started crashing back in 2000, be happy to put up my performance or the KPP performance against anybody else. And I will be very happy to make that comparison. Anyways, just wanted to set the record straight there. Now, the job is to keep our cool, come up with some strategies. What can we do to minimize risk? That's what we're here for. We like to say we're here for you, maybe help you minimize risk. That means we want to share ideas, talk to you, maybe you have questions, anything like that. That's what we're here for. Please call. Maybe you have a question about your IRA, your 401k, or maybe real estate. I have been reading, we haven't got the report for real estate yet. We might get that next week for October. Okay, remember, we're in the middle of November. We might get that next week. I probably will. But I can tell you this. In October, sales in California dramatically increased. People are going to be shocked. I bet you're shocked. Sales of homes in California dramatically increased. Dramatically increased.
Now, is that first-time buyers, Steve?
There are all kinds of sales. I haven't got all the statistics yet. I'm hoping to get them next week. But and next week, they're going to come out with nationwide. I'm just talking about California because I read it in a couple sources today. And it was about the first 3 weeks in October and what the sales were. And I was kind of shocked that the sales were. Now, mind you, prices still fell 3 or 4% month over month. Prices fell. So don't think the real estate market is getting better or anything. I'm not saying that. I'm just saying we're starting to see prices be so low, bargains being out there, that it's attracting buyers, maybe first-time buyers, maybe investors who want to rent the properties out. I don't know.
So the buyers got the good bargaining power at the moment still.
Yeah, they're in charge. They they have a property listed. They'll come in, make a lowball offer, and many times they'll get it. It's just crazy out there. The stock market again today down 300 points in the middle of the day, then rose close to the last hour. It was up close to 50 to 100 points. That's a 400-point swing. And then the last half hour fell 300 points again. Okay, just so you know, yesterday it was close to a 1,000-point move up and down, ending up 500 plus. Today, 800-point move. Those are 8 and 10% moves, everybody. Maybe even 12% yesterday. Moves in the market in one day. Very, very volatile. And you're going to have to be very careful because you're going to get whipsawed. We've been whipsawed. Whipsawed means you put your stops in. When the market crashes, you get out, and then the market goes right back up. And it looks like you sold right at the bottom. Well, you did because you're whipsawed out. Okay, so we've gotten whipsawed. It's very tough. Because we have our outs. We want to get out when the market hits, when the stocks hit those outs. We got out, and then the market turned around on us yesterday.
Which makes our timing look rather stinky.
Yeah, it doesn't look like we're very smart when that happens. Nope. So the things that happen to you happen to us. So we have to just realize we're dealing with a lot of volatility, a lot of crazy stuff going on here. Now, if investors want to profit, they're going to have to trade. You're going to have to take these chances. You're going to have to try to get in the market at the right time and then lock in profits if you can. It's very difficult because it's almost impossible to time the market. So hold on to those big blue chippers that you like, and they're holding up.